and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. Well, the equity markets have snapped the 2 days of losing streak to shut shop on a positive note on October 5 amid a recovery in global markets. A marginal pullback of the US Treasury yields and the dollar index also has helped revive investor sentiment. But will the momentum continue is the big question. We will tell you all about it, but first up, the top headlines we're tracking for you this hour. Well, it is the bi-monthly credit policy review today, with investors expecting the Reserve Bank of India to hold rates steady and remain vigilant on bringing down inflation in an economy running on full steam. Indian stocks are likely to consolidate at current levels ahead of RBI's statement on credit policy outlook for the second half of the fiscal year. Very good morning to all our viewers and welcome to the last trading session of this 4-day week, but very important one, as the big monetary policy review will be out and giving us details on what the RBI has really decided on the repo rate front, and ultimately how will that really impact the markets and our investment decisions when it comes to various asset classes. So through the trading session, a lot of action-packed shows will be there to discuss, decode, anticipate what the RBI monetary policy will have for all of you as consumers and as retail investors at large. But when we talk about the markets, the Indian equity markets advanced yesterday, led by gains in the technology and the financial stocks as part of a relief rally that was triggered by the easing of the crude oil prices and a dip in the US yields as well. Remember, the cool off in the oil prices along with oversold conditions on the charts really brought some relief to the Nifty 50 on the weekly options expiry that was yesterday on Thursday, as the index was back above the 19,500 mark. There is in front of you all the sectoral action as well. The Sensex was up by 0.6%. The Nifty Bank also high about 0.5% in trade as well. We did see the broader markets also in action. The Nifty 500 index, for example, was up by about 0.4% as well. And the volatility index did slip a bit in trade as well. So that was also a bit of the relief. Now, as far as the Nifty Bank is also concerned, all eyes will also be on the Nifty Bank, because how it reacts to the various measures that the Monetary Policy Committee will announce today is going to be extremely important to find out. Of course, although the index has snapped the 2 days of losing streak on Thursday, it is still down by about nearly 1% for the week. The index will have to close above 44,584 to prevent a weekly loss thereof, which is nearly 400 points away from the current levels as well. So that's as far as the Nifty and the Nifty Bank is concerned. On the global front, what is the kind of handover that you've got so far? Remember, the US markets, the Wall Street's main indices really slipped on Thursday as the recent data pointed to still tight labor market conditions. The US Treasury yields were still elevated, and even as the longer dated Treasury yields eased from the 16-year highs on Wednesday, investors remain concerned and were cautious that the elevated levels may actually continue to pressure on the equities as well. Now, what we want to understand is how worried the US government is as far as the spending is concerned, and how its ballooning budget deficit has now added to more uncertainty around the interest rates trajectory, contributing to a steep sell-off that has also caused a rout on the Treasury prices as well. So you can actually see the Dow Jones, the Nasdaq and the S&P 500 all down in trade, largely led by about 0.1% loss on the Nasdaq and the S&P 500 index as well. The Asian markets, however, extended the rally in the morning trade after opening flat. We did see the Hang Seng really showing a sharp bout of gains coming in, almost a 2% surge. And this was following the US stock futures also that were trading within a thin range following a mixed session for major benchmark averages as well. Now, what's really happening is that the Nikkei index is slightly down in trade. So slight bit of concern right ahead of the monthly US payrolls report that will help define the path forward for the Federal Reserve interest rates as well. Now, as far as the gift nifty is also concerned, that has indicated a positive start. Remember, the other two factors that the markets will be watching out for today will also be the crude oil prices. After rising very sharply the last week around, this week we've actually seen a sharp fall, especially in the last 2 days, when we've seen one of the sharpest falls that we've seen from March till now for the oil prices. The Brent futures were up about 0.4% at about $84 a barrel. The US West Texas Intermediate crude, or the WTI crude futures, were up by 0.4 cents or 0.5% at 82.73 as well. And this was recovering slightly from the 2% decline on Thursday as well. So the volatility in the crude oil prices is also something that the markets will have to keep an eye out on. And the RBI's commentary on how they are looking at the crude oil prices going forward, and is that going to have any kind of bearing in the future commentary and the future rate path as well, that the RBI really has to see. The other important factor again is the FII selling that has reduced over the past few days as well. The FIIs have sold about 1864 odd crore rupees in the cash market yesterday. Remember, on September 28th, the sell-off was steeper. It was 3364 odd crore rupees. Then on October 3rd, it reduced to 2034 crores. On October 4th, it was again sharp, about 4424 crore rupees. On October 5, it was the smallest fall that we have actually seen. 1864 odd crore rupees of a sell-off is what we have seen from the FII so far as well. But time to welcome our guest on the show and understand from them how are they looking at this entire global setup, and what is the kind of expectation that they have from the RBI's monetary policy as well. Joining us on the show is Mr. Vineet Bolinchkar, and he's the head of research at Ventura Securities. Very good morning to you, sir, and thank you so much for taking the time out for this discussion as well. Of course, all eyes are on the Monetary Policy Committee and the announcement that will come on the interest rate hikes. Now, there is a wider expectation that there could be a status quo as far as the repo rate is concerned, and also as far as the stance is concerned, the withdrawal of accommodation. But the anticipation of this policy has kept the markets on the edge. Bears have had a larger laugh during this entire week so far. What is your thinking of how will the markets be looking at, and what all will the markets be looking at from the RBI monetary policy today, sir?
So it's going to be more of a wait and watch, and no change in stance, given the fact that we've seen a sharp sell-off in crude, which is one of the major concerns globally, and our economy is doing relatively well. And so far, the trend of the RBI has been to withdraw the liquidity to choke the inflation, but not affect the growth by increasing the interest rates. So I think this trend will continue, and if oil stays low, I think it could mean that we would continue like this for the even at the next RBI meet, we could have the same kind of stance going through. So as far as the MPC is concerned, I don't see any kind of great changes out here, and this will be taken as a positive sign by the market. If you compare us with the world, or let's compare ourselves with the two big boys, because we are in the top three global economies, which is the US and China. And two factors which clearly differentiate and demarcate our economy against the other two is the fact that the US has reached a point of no return in terms of the kind of debt burden that they're adding to their balance sheet. And if you see China, at 520%, 520, 5.2, $52 trillion of debt is very, very high. It's even much more than what is termed in the US. So when these two countries are having such significant debt problems, and India at 660 billion is a paltry as we compare ourselves with them. So we are financially very well off. Our and what I'm seeing going forth is that investors are just going to shrug the global economy and decouple with India. So I think India's at that point in time, with the correlation with the world markets is going to break down, and we will be having our own defensive setup where markets will fall less than the global markets and will continue to rally.
Okay, we will get down to through the course of this discussion over the next 1 hour or so. Continue to come back to find out which are the sectors that are likely to be in focus amidst the RBI's policy. What should your focus be on specific stocks as well? But let's also talk about some of the stocks to watch that we have to keep an eye out on because of the news flow that they are in. First up, the stock that I wanted to draw viewers' attention, and then I will take your view also, Mr. Bulinchkar, and that is Bajaj Finance. Now, its board has really approved the raising of the funds to the tune of 10,000 odd crore rupees. Out of this, the company will raise 8,800 crores through a QIP. So there is a disinvestment that is involved of the stocks and the stake right there. The remaining 1,200 crores will be done via a preferential issue of convertible warrants and to its promoter, which is Bajaj Finserv also. And this is going to be extremely interesting because we have been discussing, even with you, Reliance Industries' entry and foray and Jio Financial Services listing and how it is likely to impact the entire NBFC space. How would you really look at that news? Is this news as a reaction to Jio Financial Services entry to protect its market share? How would you really advise investors to now go about Bajaj Finance?
So, more than Bajaj Finance, I think that it's now become the game of the big boys. So, if you see, Tata's is also very aggressive in their acquisitions pan India. Reliance is very aggressive, and so Bajaj Finance has also become aggressive. So, between the three of them, I think they're going to be veritable hierarchy they're going to control. And, just like we have seen in the telecom space when 3G was introduced, how uh, we had several players in the 2G space, and they just went off and we were left with a coterie of two. I think the same is going to pan out here. Although, it might not be just two or three players. We'll have a handful of players with very, very strong balance sheets. And those who have the balance sheet strength will have the ability to call at what rate they grow and gain market share. So, given all these, I believe that Bajaj Finance is one of the companies who has got its asset quality under extremely strong control. Their business model is flawless, and the way that they are growing and in consumer finance, the kind of data intelligence that they've gathered, it's all about execution. And among the three, if you talk of Tata Finance, the Tatas, the Birlas, the Tatas, Ambanis, and Bajaj, I believe that Bajaj has an edge in that it is a proven model. So I guess that them raising the money and should enable them to grow at that blitzkrieg 30+% growth that they've been doing. That will upend it, and further acquisitions will also help that growth. So I think it's a very, very timely fundraise, and this should help maintain the valuation of the stock and talks about the bullishness of the management in terms of growth.
So your target for Bajaj Finance, what would that be?
I think we can easily see the stock over the next 24 months go to about 40% higher from these levels.
40% higher from the current levels. Even Jefferies has come out with a report on Bajaj Finance giving a target of 88.30 for now. But definitely bullish take coming in from Mr. Bulinchkar on Bajaj Finance, a strong company like that. And in that same context, how would you be looking at Reliance Industries and then Jio Financial Services too?
So, if you see Jio Financial, it's all about the data that they have. Being in the telecom space, being in the retail space, they have data abounds them, and they have the financial muscles to stitch the partnerships, which will, take their growth, take off. They'll have a takeoff growth happening through acquisitions and through smart partnerships. So I believe that Geo Financials is definitely a contender, and one should be invested in this stock.
One should continue to stay invested in this stock. Let's also discuss some other stocks as well, which are in news. Let's discuss the consumption space first. Godrej Consumer Products, it has given a business update. We've seen a middle digit volume growth despite the weak macros and adverse weaker conditions. Home care volumes have grown in mid-single digit, personal care in low single digit. Indonesian business has grown with double-digit volume growth. That is what the company has reported. And they also expect a mid-single digit volume growth on a consolidated consolidated basis going forward. 976 was the last price for this one. Adani Wilmar has also given its business update. Standalone business down 13% year on year, volumes up 11%, edible oil business down 19% with volumes up 5%, food and FMCG business up about 25% and thereabouts right here. When we talk about the entire consumption space, is there any particular stock that is on your radar, and how would you look at these two business updates from Godrej Consumer and Adani Wilmar, sir?
So Godrej Consumer is definitely positive. It's a steady compounder. They've figured out their markets. Being an international brand, I think they'll continue to grow. If we look at Adani Wilmar, we have to understand that bulk of its business is coming from the oil markets. So, they're very, very impacted with volatility because of the fluctuating prices for oil. That is the edible oil.
Okay.
But and they're also investing in the business in terms of their consumer business is growing, so they're going to continue to break even. And I think there is still a while before the stock does anything great.
Right. Let's look at the pre-open action right now. We are seeing a bump up about 80 odd points of a surge and 19,600 and thereabouts that the Nifty might see an open right now. And the stocks that you need to keep an eye out on as far as the Nifty is concerned, L&T looks like a promising stock today, 3171 as far as the pre-opening action is concerned. Bajaj Auto, that stock also is looking promising. Again, we are seeing a 5,010 kind of a level, flattish but positive trade. But look at Titan Company, the stock is hovering near 32.29 in the opening levels as in the pre-opening levels too. Tata Consultancy Services, let's look at that stock too. Remember, the IT stocks had been the flavor of the season yesterday, and we may see some of these stocks really show some promise. TCS, Infosys, TCS is showing a downtick of 2% right now. Infosys, let's look at that one. 1479, kind of levels coming in. 0.7% of a surge for this one. Let's also look at ICICI Bank. Flattish trade over yesterday. Asian Paints, 32.20, slight uptick coming in the pre-opening market for this one. We also have Mahindra and Mahindra that's showing a slight uptick in today's trading action as far as the pre-opening space is concerned. Tata Motors, that may show some uptick today again, 628 kind of levels being seen on the pre-opening trade for this one, about 1.9%, 631 currently. And let's also look at Hero MotoCorp. 30.20, that is the level at which it is looking, slight uptick coming in for this one as well, just a 0.1% of a surge. Maruti Suzuki, 10,385, that stock could be in action again today, about 1.7% surge coming in. So we will circle back to all of these stocks that may show some promise, and we will come back to all of them. But Vineet, if I have to ask you two stock picks that you'd like to pick for our investors, which two stocks are on top of your radar today?
So from the stocks that we just spoke about, I think Tata Motors and Maruti would stand out for me. If we talk about the IT stocks, I think there are early signs of revival of hiring in the US in this direction. So there could be a little bit of more wind out here, and these stocks could firm up until the results are out.
Okay. Time to also welcome our other guest on the show. Ashish Chaturmehta now joins in. He's the ED and Fund Manager at JM Financial Services. Very good morning to you, Mr. Chaturmehta, and thank you so much for taking the time out for this discussion. Always a pleasure having you with us on Business Today. Of course, an important day. We've been discussing this with Vineet also, that how important is the RBI's policy decision going to be today. We've seen the Nifty recover some of the losses made earlier this week, but it is still about 0.5% lower on a weekly basis. To prevent a third weekly loss, the index definitely needs to, close above the mark of 19,638. The pre-opening trade shows promise, but what is your take on the RBI's policy day? How would you expect the trade to pan out?
Hi, good morning, Sakshi. So yes, I think we have seen a lot of volatility in the last couple of trading sessions, and specifically into the larger cap names. Obviously, banking as a basket has also witnessed some serious, profit booking, and particularly the large cap names like HDFC Bank and ICICI Bank in particular. But as we expect strong credit growth momentum to continue in the banking space, and we are seeing that deposits are growing faster than the credit growth. So this might result in a small bit of margin compression, but eventually we expect that these banks are trading at a very comfortable valuation level, whether it's HDFC Bank, which is quoting at 2.4 time price to book, at a very reasonable comfortable valuation level, and has underperformed the broader market as well as banking peers. Same is the case with some of the large cap banks like ICICI Bank and Axis, which are typically quoting at a reasonable valuation. And we have been particularly advocating a very strong positive view about the PSU banks for almost last 2 years, and we believe that even at current levels, PSU banks in general are quoting at zero point 0.7, zero point 0.8 time price to book. There is a big gap between large cap and PSU banks, but this gap will continue. But the point is, we believe that is going to narrow down, and we might see eventually these PSU banks quoting at 1.1, 1.2 time price to book, and that can lead to significant re-rating coming into these PSU banking basket. So as far as today's policy is concerned, we believe that there is going to be no rate hike, and eventually markets are going to like the overall banking as a basket because of the valuation comfort, because of these stocks have been underperforming for against the broader market, and see new base getting built around 44,000 kind of levels in bank nifty. So keeping that in mind, I think bank nifty should take support around 44,000, and if that happens, there could be some serious recovery which can start happening in banking as a basket.
Okay, we'll come back to you, Ashish, for your two stock picks before the markets open today. Let me quickly ask Vineet your top picks for the day. What would you suggest, and your rationale for picking those stocks and the targets as well?
So, we like Marksans Pharma a lot. I think it is the best value stock in the pharma play with extremely high growth, very strong return ratios. And we believe that the profits can, grow by almost 80% over the next 3 years, but that is for FY26. This stock is available at, 11, 12 times FY26 earnings. And given its high growth rate, improving margin set, and, exposure to the US markets through the prescription business, I believe that, OTC business, I think that this stock should definitely put on another 50% from the current levels of about 107, 108. And the other stock that I like is the recently listed JSW Infra. There we believe that 30% growth in top line and bottom line is quite achievable. And as some of the parts target is around 245 rupees over the next 24 months.
So, for what is the target for both Marksans and JSW Infra that you are recommending now?
So Marksans is about 149
Okay.
and JSW Infra is about 245.
And this is the time duration for this will be?
Both will be about 24 months.
24 months from now. 149 for Marksans Pharma and the recently listed JSW Infra 235. So you think that even at 165 one can take a fresh pick here, those who have not got the allotment. It's a good entry point?
Absolutely. And on
Okay. And on dips as well, continue to accumulate right there. All right. Many thanks then, Vineet, for sharing with us these two stock ideas. We'll continue to look at Marksans Pharma and JSW Infra even as the markets open as well. Let me take the same question to Ashish now. Mr. Chaturmoto, any two stock ideas that you'd like to share for today?
So Sakshi, we continue to like PSU banks, and as a disclosure, we are holding PSU Bank B CTF in our portfolio. But if I have to pick a stock within this basket, I think Bank of Baroda is one promising bet. I think if you look at from a valuation perspective, this stock is quoting around zero point 0.9 time price to book, seeing a credit growth of almost 16%, which is very strong. And I think the provision coverage ratio is very good, about 92%, and that gives us a lot of comfort. Asset quality has been very stable, and I think the since, as we mentioned, the entire PSU banks can see a re-rating towards 1.1, 1.2 time price to book, and within that, Bank of Baroda has shown a very strong stability in terms of its financial performance. It looks like that stock is headed for a much stronger upside. If you look at from a pure technical perspective, stock has been we saw the stock hit an all-time high somewhere in 2000, I would say 15. So we could assume that this is going to be a 7 to 8 year kind of breakout, which we are going to witness in Bank of Baroda. So stock has consolidated enough for last 2 3 weeks, and it looks like new base has been formed around 208 levels. If we don't breach these 208 levels, technically it looks like stock is poised to cross its previous all-time high and target somewhere close to 235 240 levels in a short to medium term. In the small and mid cap space, again, the stock which we are going to discuss, we hold in our portfolio schemes, and we have mentioned it in our earlier discussions also, is Gravita India. So Gravita, we like it because it's into recycling business, lead recycling business, and this stock, has a market share of almost 5 to 6% in the organized, I would say, lead recycling business. This is a 12,000 crore, opportunity. There's lead recycling, and within that, 35% is controlled by organized. Rest is being managed by the unorganized segment, and within that, Gravita has 5 to 6% market share. It is also into the business of plastic recycling, aluminum recycling. It does turnkey projects. So there are a lot of levers for the revenue growth momentum to continue, and company has been generating strong cash flow from operations. So that also gives us a lot of comfort, and we believe overall, this recycling is a $20 billion opportunity, and within that, Gravita is a good proxy play to ride this trend. So technically, stock has a very strong support around, I would say, 850 kind of trajectory. If he manages to hold this 850, I think there's a Poland flag formation which is there on the technical charts, and which gives us an indication that 1050 in the immediate short term could not be ruled out, but we believe the structural trend of Gravita looks quite promising.
All right, two stock ideas and both of them starting positive in the pre-opening space as well. Bank of Baroda 214 currently, about 0.6% of a surge can be seen for this one. And when we talk about Bank of Baroda kind of performance it has shown in the last 1 month, 10% surge is what we've already seen. Year-to-date basis, 15% higher. Last 6 months is when the move has really happened. From 166 to 214, it has already jumped about 28% or so, and 235 to 240, the breaching of all-time high levels also expected if the move continues and it holds these levels that Ashish sir has just talked about. 240 is the kind of upside target is what he's expecting in the medium to short term too. The other stock he's discussed is Gravita India, again a strong move in the pre-opening space as well. 0.7% higher, it is opening at 918.9 odd levels. Let's look at the monthly performance, 17.3% higher in trade. Last 6 months, the stock has given you 83% kind of a move right there. And in the last year-to-date basis, 105% surge. Last 1 year basis also, it's up by about 176% higher. On all of these parameters, it's trading at the highs of 1 month, 6 months, YTD and 1 year perspective, and now at all-time high levels as well. On an all-time high basis in the last 5 years especially, a 1000% surge has already been seen on Gravita from a stock price to stock price basis to a very strong move for this one coming in. Two stock ideas, and we will revisit them soon as the markets hit open. We are now seeing a settled Nifty right now around 19,621. 75 points higher in trade as far as the pre-opening action is concerned. And just like how we were discussing with Vineet, the auto names, they are looking promising. It looks like the Nifty auto is the one that is going to be at the forefront in the markets today. 0.7% higher for the Nifty auto in the pre-opening space. Stocks like Bajaj Auto, they are on an up move. Hero MotoCorp, they are on an up move as well. So these are the two stocks that are coming, and Maruti Suzuki that Vineet Bunishkar also shared is looking promising to him. 0.7% higher for this one as well. For the other stocks, we also have the IT names coming back in action. HCL Technologies, TCS, that's up in trade as well. And apart from this, you're also looking at HDFC Bank, 1544, 0.5% of a move on the upside for this one. The other space that is looking promising is the metal space. That also is looking promising, with some stocks coming on our radar as far as the Nifty movers are concerned. Hindalco, for example, up by about 1% in trade. You're also looking at JSW Steel, that's up by 0.6% in trade. So these are the two counters that are definitely among the top 10 movers as far as the metal action is concerned. Broader markets, let's also look at the Nifty 500 and see which are the stocks that are buzzing. Indigo, Interglobe Aviation, again a stock mover. Yesterday also we did see in the F&O space the stock was buzzing strongly. Again today about a 3.3% surge can be seen. From the auto basket, it's Bajaj Auto, JBM Auto now picking up. So some of these auto ancillary names will also be in focus. We also have Equitas Small Finance Bank, Bajaj Finserv also moving up. Chola Mandalam Investment, that's moving up as well. So this entire finance basket is also going to be in focus as well. As far as the F&O space is concerned, now I see Indigo as the top gainer. Ashish, I'll just come back to you. Let's look at the market opening action right now. 58 points higher, 19,603 currently for the Nifty. The Nifty bank opening 102 points higher, 0.23% of a move. 44,307 coming in for this one. Nifty Auto continues to be, and the metals also continue to be the top gainers as far as the sectoral action is concerned. The realty space also following space. You also have Bajaj Auto as the top gainer on the Nifty today, 1.3% higher for this one. Hindalco follows, a percent higher for this. Tata Motors, that's up by 1%. JSW Steel, BPCL, Tata Steel, Hero MotoCorp and Bajaj Finserv. These are the up movers right now. All of them up to the tune of about 0.7% odd in trade right now. A lot of other names also picking up pace. As far as the F&O action is concerned, you also have SAIL that's moving in as far as the metal names is concerned, about 1.2% up in trade. You also have Chola Mandalam Investment, that stock is up by 1.5%. Jindal Steel and Power, that's up by 1.5%. So the metal space is clearly going to be the focus of the day, along with autos as well. And from the aviation basket, it is Indigo that is going to be in focus. Manappuram Finance, that stock is also moving up higher, now by about 1.5%. Cipla from the pharma pack is now taking the top spot, 1.3% higher as far as the Nifty is concerned. The advances look strong, 1863 versus 255 points of a decline, stocks of a decline on the NSE right now. Let's look at what is down in trade. Bharti Airtel, 0.25% down in trade right now. You also have some of the other stocks that are slightly declining. I think United Spirits, Persistent Systems, Balkrishna Industries, these are the stocks that are down. Britannia is down in trade. HUL, Nestle, FMCG pack is declining in trade today. Whereas the banking majors, they are picking up pace. ICICI Bank, 0.3% higher in trade again. HDFC Bank, moving up in trade too. These are the banking names that are flourishing higher. Ujjivan Small Finance Bank, let's look at this counter, 2.8% higher. Let's also look at Bajaj Finance. There's news flow clearly there. 10,000 rupees of 10,000 crore rupees of the fundraise that has been approved by the board, and that is likely to keep the stock afloat. 0.7% higher in trade, 79.10. Let's also look at Reliance Industries at the same basket, because this raising of the funds is clearly in a reaction to Jio Financial Services entering the market. 0.3% higher, 23.21 for this one. Adani Wilmar was in the stocks to watch list, 1.1% higher in trade as well. You also have Kalyani Jewelers, that's up by about 3% in trade right now. Ashish, quickly coming to you, your thoughts on the market opening and what does it suggest? Would you stay the course on the Nifty?
So my sense is yesterday also we managed to sustain at a higher level, and again today there is a gap up opening, which gives us a reasonable comfort that at 19,500 there is a good support which is emerging in the market. Until the time we trade above 19,500, there is a strong possibility that we might inch up towards 19,800 to 20,000 kind of trajectory. As I mentioned, banking, we have a constructive view, and it has got a high index weight also, so that also gives us a lot of comfort that 44,000 levels are going to act as an important support zone. Until we sustain above it, there's a good likelihood of Bank Nifty moving towards 45,000 trajectory. So all in all, my sense is, we have a positive bias till the time we sustain above 19,500 kind of trajectory.
Okay, Bajaj Finance, what would you do on this stock today after this news flow has come about?
So we have a positive view and we hold this stock in our portfolios as well. My sense is we have seen a very strong AUM growth in the latest quarterly update with a strong, I would say, overall AUM. So this gives us a lot of comfort. Recently, they are planning to raise a capital, so that also gives a good comfort at a right time ahead of festive season. So my sense is the stock is poised for a move towards its fresh all-time high and can move towards 85, 8600 kind of trajectory. On downside, I think a new base has been created around 7700. So till we trade above 7700, I think the overall bias should be positive and strategy should be to buy on dips.
Okay, strategy should be to buy on dips, 8600 kind of target. So you have Jeffrey's positive view, 8800 odd rupees of a target, 8600 is what Ashish is saying, and a 40% surge from the current levels is what Vineet had also said on Bajaj Finance. So a thumbs up from all the analysts that we have discussed so far on the show. Apart from this, two spaces clearly in action today. The metal pack showing strong move in today's trading space. Jindal Steel and Power, the top gainer in the F&O action, 2.5% higher in trade. We have JSW Steel 2% higher again in the F&O basket, strong move coming in. SAIL is also moving up higher by 1.8%. You also have Tata Steel now picking up pace, 1.2% of an up move can be seen on this one. Hindalco from the Nifty 50 gainers is also moving higher in trade. How are you looking at this entire move in the metal space, and any particular pick that you'd like to highlight from this space?
This is for me.
Yes, Ashish.
Okay, so I think this is a general rebound which we are going to witness in metals after a good correction. So maybe we might see some recovery happening in Tata Steel, in JSW Steel. But from a pure positional perspective, I think still these stocks are in a range, and we don't find any reason why this range should get breached on either side. So maybe a good pullback trade for next for 3 to 4%, but beyond that, my sense is these stocks need some further confirmation.
Okay, and the auto basket that's on the move again. We are seeing, Maruti Suzuki, Tata Motors kind of stocks coming back in action. You also have Bajaj Auto and Hero MotoCorp buzzing in space. Anything that interests you in the auto space? Because, we are fast approaching the festive season, which is likely to give them a good fillip as far as the consumption demand is concerned for all this vehicle space. Anything that looks promising on charts?
So we have been very positive about Maruti, and still we believe that within the four-wheeler space, Maruti should do extremely well. From a pure price perspective, behavior, the stock is a multi-year breakout after consolidating for last 6 years from 2017 to 2023. We have seen some profit booking in the last three trading sessions, and after this profit booking, I think the risk reward looks very promising. I think 10,050 is going to act as an extremely important support for Maruti, and if he manages to hold these levels, then I think on upside 11,000 levels could not be ruled out in an immediate shorter term time frame. If you look at the kind of launches Maruti has done in the SUV segment, that is also quite promising, and we believe they are going to gain some market share which they have lost in the last couple of years. So there could be some sharper recovery in terms of market share gains. We have seen commodities seeing decent amount of correction, which is also very comforting for most of these auto companies. And again, crude has seen some correction, so that is also quite positive from a demand perspective. So all in all, it looks very promising, and within that, Maruti, it would be our top pick in the four-wheeler passenger vehicle segment.
Right. So, Ashish, since we're talking about the festive season moves along with autos, a lot of people spend a lot on jewelry and buying of gold as well. That happens. And we are seeing Titan stock buzzing over the last few days as well. Even today, it's up by about 1.5% higher in trade at about 32.66. That's the level that we see Titan moving at. Kalyan Jewelers, that's a strong mover today. 4.5% move is what we've seen. The recently listed Senco has actually shown a very strong move over the past few weeks as well. Your thoughts on the entire gems and jewelry space? Any particular space that stock that you'd like to highlight? Should it be the direct gold plays that one should go for, or should one look at the finance names? Because Manappuram Finance is also a gold financier, and that is seeing a very strong move over the last few months.
So yes, I think Titan is one stock which we like within this consumption space, and I think this is a very strong breakout which is happening in Titan. As a disclosure, we hold Titan in our portfolios, and I think this move can extend towards 3,500 kind of trajectory. On downside, I think 3,200 is a fresh breakout level. So ideally this is a good support around 3,200. On upside, 3,500 is a possibility. To play this entire theme also, I think the lemon tree within the hotel space looks also very, very promising in the small and mid cap space. And I think this stock is poised for a move towards 145, 150 purely on a technical basis. And I think now a fresh breakout has happened beyond 118 levels. So the risk reward is very favorable in stock like lemon tree at current levels.
Okay, definitely. And of course, we are looking at the entire World Cup action. There is no space to book inside the hotels as far as all the cities are concerned which are hosting the matches. And hotel stocks are definitely going to be in action over the next 1.5 months or so. Lemon Tree, definitely one of the key favorites of a lot of our analysts right there. 2.7% higher currently for Lemon Tree and looks promising to Ashish as well. Since we're talking about the RBI monetary policy also today and the entire rate sensitive sector, they are in focus. You talk about the Nifty Bank, that's higher in trade. Private banks are moving up, financials are moving up. You have the auto space that's moving up, and the realty space is also in action. The Nifty Realty is now as the top gainer as far as the sectoral moving action is concerned, 1% higher for this one. As far as the RBI move is concerned, there is a large expectation, Ashish, that it's going to be a status quo. No decision on the rate hike front today, and a status quo on the stance as well. What investors and what retail investors should be watching out for is largely a commentary on inflation. Any change in the forecast thereof going forward from here? Can the World Cup also really add on to the inflationary aspect? Because a lot of reports are suggesting that. And would that really mean us waiting for a longer time as far as rate cut scenario is concerned? But how would you approach this entire rate sensitive basket, and any particular sector or stocks that you'd like to highlight from here?
So I think if you look at a realty space, we are seeing very strong registrations happening across tier one cities. If you look at the inventory level in the realty space, it is at a very, very low level, and that gives us a lot of comfort that price appreciation will continue for the property market, and this will lead for a positive effect on most of the real estate names which are typically rate sensitive, and this is getting reflected into price performance behavior of stocks like DLF, Volte, Oberoi, and most of the other real estate plays. So this gives us a reason that on dips. Ideally, these stocks looks very, very promising. Within realty space, I think DLF is poised for a much stronger recovery. I think stock has formed a strong base purely on a technical basis around 518 levels. And if he manages to hold this, I think 560, 570 is what one can expect on upside. Again, I think from a consumption perspective, we are seeing a very good traction, and plays like Zomato is something which we like from a pure structural perspective. Contribution margin is going to be around 5%. We expect blanket to be a bit positive in next 1 to 2 quarters, and we expect the revenue growth momentum to continue for 35 to 40%. So again, this would be very positive for a company like Zomato, which is a proxy for the entire consumption play. And I think as far as banking is concerned, we are, as I mentioned, we are very constructive about the PSU banking basket. So I think stocks like Bank of Baroda, Canara Bank, they continue to remain our preferred pick. And as far as inflationary concern is concerned, my sense is the way commodities are seeing some correction in the last couple of weeks, and eventually crude has also seen some correction. This could result in some cooling off in the overall inflationary environment.
Okay, got that. Ashish, the other space that even Vineet was mentioning, he's, positive on Marksans Pharma, and now healthcare space is picking up some pace. We are seeing the Nifty Healthcare Index up by about 0.7%. And, we are looking at stocks like Cipla now come up as the top gainers as far as the Nifty is concerned. You also have Dr. Reddy's and Sun Pharma picking up action too. And in the mid-cap basket, again, you do have even that diagnostic majors like Alchem Labs, Laurus Labs. You also have, stocks like Divis Laboratories moving up. in trade. Dr. Lal Path Lab, that's also moving higher in trade. Any particular stock that you'd like to highlight from the entire pharma space? What is your entire view on the Nifty Pharma, and any stock specific idea that you would like to share?
Sakshi, I think they are in a consolidation phase with a positive bias, but we need to understand that this is going to be more market neutral rather than outperformance at this point of time. And we believe that the if you look at Nifty Pharma as an index itself, 15,000 is going to act as a very important support for the index, which is currently quoting around 15,140 trajectory. And my sense is this move can extend towards 15,500, but where I would like to differentiate is in terms of the price behavior is going to be neutral. We don't expect it to significantly outperform the broader market. So yes, there is a good recovery which is possible from current levels after a sharp dip, but at the same time, it looks like they are going to remain sideways. What we like within the entire healthcare space is the hospital segment, and within that, my sense is Apollo Hospitals one stock which looks very promising from a medium to long term perspective. Stock has formed a strong base around 5,000 levels. And if it manages to hold these levels, I think 53, 5400 could not be ruled out in Apollo Hospital. So that's our take on the entire healthcare and pharma space.
Okay. All right. Ashish, any particular sector that you are now getting incrementally positive on, or any particular theme where you now find margin of safety emerging? We've seen several sectors in rotation over the last 6 months on a year-to-date basis as well. Is there any space that is now likely to outperform? We're just about 2 months away from the calendar year's close and about 6 months away from the financial year closure as well. Which sectors will now start to be at the forefront of the markets as per you?
So I think, as I mentioned, banking and financial looks quite promising. Within that, obviously, PSU banks looks very good.
Sure.
Apart from that, I think the entire capital goods space will continue to do well. L&T obviously would remain our preferred pick within the large cap space, but the proxy plays like wires and cable segment should continue to do extremely well. And within that, I think stocks like KEI and Polycab, and again, as a disclaimer, both these stocks we continue to hold in our portfolio. We believe that this is going to be a good proxy play for the entire capital goods, real estate, infra recovery, which we are going to witness. And both are market leaders. So, Polycab at one point of time used to have a 12% market share in wires and cables. Now that number has grown to almost 16, 17%. So, but this indicates clearly that market share gain, which Polycab is gaining. And at the same time, there's a strong export growth momentum which Polycab is witnessing. So I think Polycab is one stock which we like in the wires and cables segment. In the mid-cap space, I think KEI Industries looks very, very promising. Again, 8% market share in wires and cables, 16 to 17% kind of revenue growth momentum we are going to witness. And I think after this RR Bill's listing, there is still a valuation re-rating which will continue to happen in stocks like KEI and Polycab. So from a pure technical perspective, KEI has a strong support around 2640 levels, and if we manages to hold this 2640, we think that stock can move towards 3100 to 3200 kind of trajectory.
Okay, got that. The other space I wanted to discuss with you is the IT space, Ashish, and how are you now positioning yourself on the IT stocks? Of course, these stocks will again be in flavor next week entirely because of the earnings season kick-starting with the bellwether IT firms first reporting their numbers. We are seeing some move coming in on TCS, HCL Tech, Infosys and the likes as well. But what has been an outperformer clearly in the IT pack is the mid-cap IT space, which we've discussed with you even previously. Birlasoft is a stock that we've discussed with you constantly. Coforge is also now showing again promise in the F&O space today. It's up by about 1.5% odd or so. Any other stock that you'd like to share from the IT pack that now looks promising?
So my sense is, even at current levels, midcap looks quite promising, and within that, Birlasoft, Persistent, these are the names which continue to show strong relative outperformance against its broader peers. And we are structurally positive about names like Larsen & Toubro, Infotech, Larsen & Toubro, Technology Services. But from a pure technical perspective, still we need further confirmation for them to show some relative performance in the immediate short term. But yes, if I consider it in the immediate shorter term time frame, then I think Persistent and Birlasoft, these are the two names which looks quite promising, and they have seen a reasonable correction in the last 4-5 trading sessions, and that's why I think the entry point looks quite promising at current levels.
Okay, got that. Let's look at first your stock pick, Ashish, Gravita India. It's now moving up about 1.6% high and trade at 927.5. And we were discussing it at around 918 odd or so. It's already shown that strong move, in the just in few minutes as well. What would you now say at this point as well? Good entry point for investors, and what should they be looking at? The time frame ideally that they should be holding this stock for?
So I think it's a thematic play. Sakshi, we need to understand that we believe that the recycling theme is a $20 billion opportunity because of ESG, because of climate change. This is one thing which will be at the forefront, and there are very limited listed plays which are available on markets to ride this trend. And Gravita has shown a very strong financial performances, whether it's revenue growth momentum, whether it's the profit growth, and also this is getting converted into strong cash flow. So this gives us good comfort that in a business like this, if there's a strong cash flow generation happening, then this is quite constructive. Apart from lead recycling, it's into plastic, aluminium, turnkey projects. So this also gives us a lot of comfort from a diversification perspective. So my sense is this is a thematic play. We need to ride the trend, and obviously we should use technical as a parameter to understand whether there is a strength in the trend, and that is quite that looks quite promising. So if you look at a couple of days back, stock hit a fresh all-time high around 980 trajectory, and this happened with almost 30-35 lakh shares traded volume, and after that it's
Yeah.
consolidated for 5-6 days, and now there is an uptrend which is again emerging. So this gives us a comfort that 880 900 is going to be a very strong support for the stock until we hold above this. There is a strong likelihood 1050 1100 could not be ruled out in Gravita India.
Wonderful. Okay, another space that warrants our attention again is, the Adani group shares, especially because, we've kind of seen a large investors' interest into this entire basket. First, because of the controversy that the stocks had been reeling under, and after that, the value that the investors started to look out after the sharp fall when we saw, started a recovery in the entire process. Again, today, Adani Enterprises is up by 1.5%. Adani Ports is up by 1%. You have Adani Wilmar that's given us, update on the business too. So this entire Adani basket is coming back in focus. Any particular stock that you track from this basket you believe that investors can now look at and keep behind all the worries that had been plaguing the entire sector and the stocks?
So Sakshi, we have till not recommended any kind of position in Adani Group, but yes, I think Adani Ports is one stock which has been in radar for many months and quarters, and we believe that fundamentally this is one of a very promising name. So after this recent correction from 900 to almost 820, I think new base has been formed around 820 825 trajectory, and it looks like stock has been consolidating. So there's a very strong likelihood from a price performance perspective stock can move towards 880 900 kind of trajectory. So if we have to take a bet within the entire Adani group, I think Adani Ports looks one of the promising bets.
Okay, got that as well. All right, before we thank you, there's another space, Ashish, that we want to discuss with you, and that would be also the new age tech stocks. And that is because today Nykaa is up by 2.3% odd. There's news flow again on PB FinTech that SoftBank is likely to sell 2.5% stake worth about $105 million via the block deal. The entire space, Zomato, we've already discussed. It's again picking up pace, and we are again hoping for this quarterly earnings to give us some more idea about how much progress have all of these companies really made as far as the operational profitability and the net profitability is concerned. Any particular stock that you'd like to highlight that you like from the new age basket that looks promising on the charts too?
So we have been very constructive about two names, Zomato and Policy Bazaar. And again, as a disclosure, both these stocks we continue to hold in our portfolio. From a price performance perspective, I think Zomato is showing very strong relative outperformance, and I think it has hit a fresh 52-week high recently with very strong volume activity. As we believe that 35 to 40% kind of revenue growth momentum will continue to happen. Contribution margin is going to be in a range of 5% and blanket is going to turn around. All this indicates that we are going to ascribe a much better value to a stock like Zomato. So my sense is 100 around 9900 stock has formed a strong base, and on this breakout, the price projection which comes to my mind is around 120 125 levels. Apart from that, Paytm has given a fresh breakout purely on a technical perspective. We don't have any position in the stock, but I think this is a very strong breakout from a technical perspective. Stock is a 5 to 6 month kind of breakout which is happening on Paytm. So if this continue, then I think on upside 1000 levels, which is a 4-digit mark, can be seen in Paytm. For that, I think 880 870 on downside should be seen as a very strong support base.
All right, a 4-digit mark on Paytm could be seen soon if the momentum continues. 3.2% higher right now at 923. Zomato looks promising as well at this point in time, and these dips could be looked at buying into as far as the new age tech stocks are concerned too. Well, many thanks, Mr. Chatramota, for being with us on the show and discussing all these wonderful ideas with all our viewers and an insight into the correct strategy for investors to follow amid the entire global setup. Always a pleasure having you with us on Business Today Television. Meanwhile, the market's inching about 60 points higher at 19,600, and it's holding steady about there. Fingers crossed right ahead of the RBI's big monetary policy outcome. That's just about 20 minutes away from now. Remember, the RBI is all set to announce the decision as far as the repo rate is concerned. But what do the lead economists really anticipate from the policy committee today? Business Today Television's managing editor Siddharth Zarabi spoke to Madan Sabnavis, the chief economist at Bank of Baroda, Saugata Bhattacharya, the chief economist at Axis Bank, to really find out what their own expectations are from the policy. Let's listen in.
Madan, if a status quo is completely baked in, then what do you think the worthy members of the MPC are really splitting hairs on?
No, I think it's all a case of what you do to the repo. And I think there's been some bit of controversy. We have one of the members who has been against this concept of withdrawal of accommodation. So this entire concept of withdrawal of accommodation has been interpreted in a different manner. So is it a real kind of an interest rate which we're talking of, in which case there is still some bit of space for withdrawal of accommodation, meaning you remain where you are? Or is it a case of saying that you have to provide more liquidity to the system? There was excess liquidity earlier. Now that it's been withdrawn, is there a case for saying you need to withdraw more of this accommodation? The system is already in a deficit right now. So I think that's where the debate normally goes on. If you go through the minutes of the meeting, I think the dissonance is probably coming only on this particular area. Otherwise, in terms of the forecast for growth and inflation in particular, because that is the critical factor on the basis of which a decision on the repo rate is taken, I think that is more or less unanimous. So it's more a case of the stance where there could be a bit of debate about whether the stance should remain where it is or should it go to neutral, because it's normally felt that when you change the stance, it's a precursor to a change in the rate action in the coming in the future policies. But as of now, I think it's almost clear that the repo rate will not be changed.
The troika of difficult conditions that we had seen in late 2022 seem to have again come back on the screen. So high US yields, the strong US dollar, and particularly high oil prices. All the fingers crossed. Oil prices have come down, and given the inventory levels, expected demand and supply situations, hopefully it will not again go back towards the 95, which will be a blessing for us. But the global financial market tight conditions definitely create trouble for all emerging markets, including India. RBI has shown that it is relatively independent of the G10 central bank policies, but we can't ignore. I mean, nobody can ignore the policies of a very large set of economies like the US, the Euro area, etc. So it is difficult, but tomorrow again, I mean, these will not be the global financial conditions will not impact the actual policy actions.
All right, so that was the big expectation from the top economists of the country as far as the RBI's Monetary Policy Committee review is concerned. Just about 17 minutes to go for the RBI governor to tell us what the Monetary Policy Committee has really thought over the last 2 days and decided as far as the rate course action is concerned, and what is the future outlook on both inflation and the GDP forecast as well. Is there going to be any tweak, and how do you really read that? All of that will also follow soon, as after the policy decisions are announced by the governor. We will again come back with again economists and market experts are deciphering and decoding what the policy decisions have been made and guiding you as well. So this is going to be an action-packed day. Do stay tuned on to Business Today television. Meanwhile, before the close, let's quickly look at how the markets are doing at this point in time. 47 points higher. It slipped marginally below the 19,600 mark as far as the Nifty is concerned. The top gainer on the Nifty, Bajaj Finserv 2.2% higher, Bajaj Finance 1.5% higher in trade, Titan, ITC and Dr. Reddy's and Tata Consumer Products. These make up for the top gainers on the Nifty as well. On the losers list, which are the stocks that are really not contributing ahead of the policy, you can see Hindustan Unilever, L&T now slipping away, Power Grid, ONGC, Bharti Airtel and Britannia and Coal India now dragging a little bit. The Realty Index remains the top gainer index. Right before the policy, you also have the autos, the metals and the financials also up in trade, especially the private banks and the overall Nifty bank action. PSU banks not contributing today. The IT stocks have slipped into the red, so keep an eye out on that too. On the F&O space, the stock that you need to watch out for now is Multi Commodity Exchange, or the MCX stock. That's now up by 3.6%. So sharp move coming in on this one as well. Of course, Bajaj Finserv from the F&O basket also showing some moves over there. Lupin, Adani Enterprises and Apollo Tyres, the other movers as far as the F&O action is concerned. From the Nifty broader markets, the 500 index, you do see Century Ply gaining in strength today, 4% higher. General Insurance Company, 3% higher. BSE up about 3%. Bajaj Finserv again, repeat on this index too. You also have CDSL. So the market related players also stocking some moves coming in. Indigo, that also remains a top mover as far as the markets are concerned. So that's as far as the market action is concerned, right ahead of the opening of the commentary by RBI Governor, and we will continue to look at that as well. You can watch the live speech on our platform as well as far as RBI Governor's decisions are concerned. So do stay tuned on. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. And until then, many thanks for tuning in.
The market will become a stock specific. So we are seeing a lot of companies announcing provisional updates for Q2. And we have seen all the banks and NBFC reporting a very, at least in line or better than expected growth as far as the provisional updates are concerned. And the key update which I would like to highlight is from HDFC Bank. So on a pro forma basis post-merger, the HDFC Bank has came out with a very rock solid commentary wherein they have went on record to say that gross deposits and advances have increased by 18% and almost 17.6% on a merged entity basis. At the same time, they have disbursed highest ever home loan post-merger that is to the tune of 48,000 crore. This is a growth of almost 14% on a Q1Q basis and 11% on year-over-year basis. And we all know that HDFC Bank has got a significant weightage in Nifty as well as Bank Nifty, and that was putting pressure on the benchmark indices. I feel we can see some short covering as far as HDFC Bank is concerned. The street is aware of the fact that there may be some margin pressure for a quarter and two as far as HDFC Bank numbers or profitability is concerned. But I believe the healthy growth in terms of deposits as well as advances will be liked by the street, and we may see some short covering, and that will lead to the support to the entire banking sector, especially private banking sector. So I feel again a market is a stock specific market. we need to take a market sector-wise or stocks-wise based on the news flow.
Fair point. HDFC Bank is Sunny's top pick, not only for today, but it's a real long-term asset that should be a part of your portfolio. And the interesting part about HDFC Bank, as is visible in front of you on the screen, is that it's corrected fairly sharply from 1750, which you saw in the month of July, to about 1500 rupee levels. Apart from HDFC Bank, Sunny, is there anything that catches your fancy in the auto ancillary space?
Yeah, definitely. I think today there is a news that Sajan Jindal Group is going to acquire a stake in MG Motors India. We all know that the promoters are from China, and that shows that even a new players after 20-30 years of very pretty structural growth story, auto new players are eager to bet on the Indian automobile sector, and that shows that pretty long runway as far as automobile sector is concerned. And I would like to place my bet on auto ancillary company, and one of my pick is Minda Corp. So basically, the company is into the just a minute, I will check my. Yeah, so company is into the leading manufacturer of auto components with a significant global footprint. They are into diverse range of products such as mechatronics, information and connected system, plastic and interior, aftermarket, electronic market, excellent. And recently, company has won a very big order as far as EV portfolio is concerned. So 50% of the order wins are coming from the electric vehicle portfolio. Some of the new products like such as smart key lock for two-wheeler is likely to account for 15% of the total lock set revenue. And the value per kit of the smart key lock is almost 3x, 4x as compared to the manual key lock. So that's so we are seeing a shift as far as premiumization is concerned for this company, and we expect the company's revenue to grow at a space of 20 to 25% over next 2-3 years on the backed by this new product development, new customer acquisition. And we feel that in FY23, the company has posted sales of 4,300 crore. And my understanding is that company is likely to post sales of 5,500 crore in FY25. And profit will grow from nearly 290 crore in FY23 to 340 crore with an healthy ROE, ROC of 18 to 19%. So at the current juncture, although the stock may appear to be slightly pricier as far as valuation is concerned, trading at almost 22, 23 times FY25 earning. But looking at a healthy growth, I feel the premium valuation will sustain, and one can accumulate this stock gradually for the price target of 400 rupees over the next 12 to 18 months.
Fair point. Minda Corp is right there as far as the stock price chart is concerned in front of you. Let me just share some other details. It's a outperformer on a long-term basis. The 5-year compounded annual growth return is somewhere like 19%. Each year, the stock over the last 5 years has appreciated on average by 19%. It's handsomely beaten the return from the BSE Auto Index, which is at about 11% CAGR over the 5 years, and at a price earnings of about 27 rupees. This is one of the shining beacons in the auto ancillary space as far as Sunny is concerned. A couple of other points. At about 7,700 crores in market capitalization, the company is promoted about 4,364 crore rupees as revenue in the past 12 months and a profit after tax of about 288 crores. So Minda Corp and HDFC Bank should be a part of your long-term portfolios. These are long-term picks from Sunny when it comes to making strong portfolios in this kind of an environment.
If you like the video, do like, comment, share and subscribe.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. 7 years ago to the date, Reliance Jio launched what soon transformed into a massive telecom network with many firsts to its credit. The way Indians consume data, the way Indians made voice calls, and the entire digital story of India has been deeply influenced by Reliance Jio. And as 7 years pass, with several
industry first and also a tectonic shift in the digital landscape in India. We take stock of the impact of Jio on India's telecommunication landscape, its consumer, and what lies ahead. And joining me too are two of India's foremost experts in telecom, those who have tracked and understand this space very, very closely. Jaideep Ghosh, former partner at KPMG, and Mahesh Uppal, Director of Comfirst India. Thank you very much for joining in today. Jaideep, I'm coming straight to you with the big question. Between 2016 and 2023, what has changed as far as India's telecom story and growth is concerned?
Siddharth, first of all, thank you very much for having me. So as you know, we can see the telecom sector in India has grown significantly in the past 7 years. To summarize, the number of mobile subscribers has increased by roughly 25%. We did have about 1 billion subscribers even in 2016. The mobile tele density has increased by 21%, which indicates, in the population, how much more telecom SIM card subscriptions has been sold and gives a reasonably good indication of number of people who has been added as telecom users. And the average revenue per user, or the ARPU, has increased by 42%. So roughly the number of mobile subscribers increased by 25% between 2016 and 2023. And tele density also increased by more than 20%. If we look at just quickly a quick snapshot of the broadband, the fixed broadband, that's grown significantly. We were pretty much, very low in terms of fixed line, fiber optic, etc., broadband penetration. So it's grown about, 400%. The broadband speed has grown by minimum like 600% in the past 6-7 years. But the tariff has by and large reduced by about roughly 40%. So that's the story. And of all the factors which are attributed to this kind